Hello everyone and welcome to today's session. In this long and very important lecture, we are going to explore two foundational topics in federal taxation: taxpayer identification and residency verification. These concepts may seem simple at first glance, but they are packed with details, rules, exceptions, and real-world situations that you must understand for the enrolled agent exam and for actual tax preparation in practice. Throughout this lecture, we're going to break everything down step by step, using clear explanations, relatable examples, and practical scenarios. So get comfortable, take notes, and let's walk through it together. Think of this session like a classroom conversation, not a textbook reading. Why identification and residency verification matter. Let's begin by understanding why these two topics form the backbone of the entire tax return preparation process. Whenever you prepare a tax return, the first job is to understand who the taxpayer is and what their US tax obligations are. And how do we determine that? Through identification and residency verification. Why is this so important? Well, let's break it down. Number 1. Identification ensures accuracy. The tax return belongs to the correct person. You prevent mismatches between IRS records and taxpayer data. Credits, deductions, and filing status eligibility depend on having correct identity information. Think of it this way. If someone's SSN is entered incorrectly, or if a dependent doesn't have the correct ID number, the entire return may be delayed or even rejected by the IRS. Number 2. Identification helps prevent fraud and identity theft. We live in a world where identity theft is extremely common, especially during tax season. Fraudulent returns can be filed using someone else's social security number to claim refunds. The IRS uses identification safeguards like the ITIN to prevent this. Number 3. Residency determines what income is taxable. This part is huge. A taxpayer's residency status decides whether they are taxed on worldwide income or only on US source income. This one distinction changes everything about how a return is prepared. For example, a US citizen pays tax on all global income. A resident alien, green card holder, or SPT resident also pays tax on worldwide income. A non-resident alien pays tax only on US income and often at different rates. Dual status taxpayers follow special rules. So you can see, residency status shapes the entire tax picture. Number 4. Identification and residency status affect credits. Credits like Earned Income Tax Credit, ITC, Child Tax Credit, CTC, American Opportunity Credit, AOC, Additional Child Tax Credit, ACTC, all depend on valid social security numbers and residency rules. If identity or residency is incorrect, these credits get disallowed. So yes, identification and residency checks are not small steps. They're the foundation of everything else you do as a tax preparer. Taxpayer identification numbers, SSN, ITIN, ATIN, EIN. Now let's move into the heart of the identification topic, the different types of taxpayer identification numbers. There are 4 main ones you must understand. Number 1. SSN, Social Security Number. Number 2. ITIN, Individual Taxpayer Identification Number. Number 3. ATIN, Adoption Taxpayer Identification Number. Number 4. EIN, Employer Identification Number. We'll break down each one, how it works, who it's for, and why it matters for taxes. Number 1. Social Security Number, SSN. The Social Security Number is the most common taxpayer ID number in the United States. It is issued by the Social Security Administration, SSA, not the IRS, and almost everyone who is a US citizen, green card holder, or lawfully authorized worker is eligible for one. Why SSNs matter for taxes? The SSN is used for filing a federal tax return, receiving refundable tax credits, identifying dependents, tracking income reported on W-2 and 1099 forms. Processing refunds. If the SSN is wrong or mismatched in IRS records, the return will either be rejected or credits will be denied. Dependents and SSNs. A key EA exam point. To claim the child tax credit, the child must have a valid SSN issued before the filing deadline. Even one day late, for example, the SSN issued after 15th April, and the child becomes ineligible for CTC. This is a favorite trick question on the exam. Number 2. ITIN, Individual Taxpayer Identification Number. Now let's talk about ITINs, which are issued by the IRS, not the SSA. An ITIN is for people who cannot get an SSN, but still have a US tax filing requirement or a tax reporting need. These may include non-resident aliens filing Form 1040NR, spouses of US citizens who are not eligible for SSN, dependents who live outside the US, foreign investors, students or scholars under certain visas. What an ITIN can be used for: filing a tax return, reporting income, claiming certain credits such as the child and dependent care credit if the qualifying person has an SSN, receiving treaty benefits, filing as a spouse on MFJ return. What an ITIN cannot be used for: an ITIN cannot be used to claim the earned income tax credit, claim the child tax credit, work legally in the United States, receive social security benefits. ITIN expiration rules. ITINs expire if they have not been used on a tax return within the last 3 years, or they contain certain middle digits that the IRS cycles for renewal. If a taxpayer files with an expired ITIN, the return will be processed, but all credits will be denied until the ITIN is renewed. This is another favorite EA exam point. Number 3. ATIN, Adoption Taxpayer Identification Number. An ATIN is a temporary 9-digit number issued by the IRS to a child who is being adopted by a US taxpayer and does not yet have an SSN or cannot obtain one immediately. Once the child receives an SSN, the ATIN is no longer used. Number 4. EIN, Employer Identification Number. An EIN is issued to businesses, estates, trusts, certain individuals with employees, partnerships, and corporations. In the EA exam, EINs are mostly relevant when a taxpayer runs a business or when dealing with estate trust income on Form 1041. Now that we understand ID numbers, let's move into identity verification, another essential part of tax preparation. This section is extremely important because identity issues lead to IRS rejections, delays, or fraud flags. Accepted documents for identity verification. To verify a taxpayer's identity, you may use Social Security card, state-issued ID, driver's license, passport, visa, ITIN assignment letter, birth certificate, usually for dependents. These documents ensure names match exactly, numbers are correct, dates of birth align, taxpayer eligibility is confirmed. Even a slight mismatch, for example, a missing hyphen or changed last name after marriage, can trigger return rejection. Identity Protection PIN, IP PIN. The IP PIN is a 6-digit number issued by the IRS to prevent refund fraud, help identity theft victims, protect taxpayers who volunteer for extra security. If a taxpayer has an IP PIN, they must use it on their return. E-filed returns missing IP pins will be rejected. Paper returns without IP pins will be delayed. Anyone can opt in to receive an IP pin using Form 152-7 if they meet certain criteria. Residency status for tax purposes. Now let's move into the most important and detailed part of this topic, residency verification. Residency determines filing requirements, whether Form 1040 or 1040NR is needed, which income is taxable, credit eligibility, how treaty benefits apply. So let's break it down carefully. Types of residency under US tax law. There are 4 residency categories you must understand. Number 1. US citizen. Number 2. Resident alien. Number 3. Non-resident alien. Number 4. Dual status alien. Let's explore each one and how it affects tax obligations. Number 1. US citizens. US citizens are always taxed on worldwide income, regardless of where they live. This includes wages, foreign bank interest, foreign property income, overseas business income. Citizens living abroad may qualify for foreign earned income exclusion, fee, foreign tax credit, FTC, housing exclusion, but they still must file. Number 2. Resident alien, green card test. If someone is a lawful permanent resident of the US at any time in the year, they are considered a resident alien for tax purposes. You only need the green card for 1 day in the year. Resident aliens are taxed exactly like US citizens. Worldwide income, same credits, same filing requirements. Residency continues until the green card is formally surrendered or revoked by courts or immigration authorities. Number 3. Resident alien, substantial presence test. This test is the most exam-tested part of residency rules. To meet the substantial presence test, SPT, the individual must be physically present in the US for 31 days in the current year and 183 days over the last 3 years using a weighted formula. Here's the formula. All days in current year, 1/3 of days in prior year, 1/6 of days in second prior year is equal to must be 183 or more. Example, very important for exam. Imagine a person spent 120 days in the US in 2024, 2023, 2022. Let's calculate. 2024, 120 days. 2023, 120 times 1 divided by 3 equals 40 days. 2022, 120 times 1 divided by 6 equals 20 days. Total is equal to 180 days. So they do not meet the substantial presence test and are a non-resident alien. Exceptions to the substantial presence test. Certain individuals do not count days toward SPT, including students, F, J, M, Q visas, teachers and trainees, J or Q visas, diplomats, certain athletes, individuals with medical conditions preventing departure. There is also the closer connection exception. This allows someone who is physically present in the US to still be treated as a non-resident if they maintain a tax home abroad and have closer ties to their home country. They must file Form 8840 to claim this. Number 4. Non-resident alien. Non-residents are taxed only on US source income, effectively connected income, certain passive income at statutory rates. They file Form 1040NR, not Form 1040. They generally cannot claim standard deduction except under India Treaty, have limited credit eligibility, must follow specific withholding rules. Number 5. Dual status aliens. This occurs when an individual is a non-resident part of the year and a resident for another part of the same year. Often happens in arrival or departure years. Dual status taxpayers must split income between the 2 periods. File Form 1040 with a statement. Cannot claim standard deduction. Must track travel days carefully. This is a high priority exam topic. Tax treaties and tiebreaker rules. When two countries claim the taxpayer as a resident simultaneously, tax treaties come into play. Tiebreaker rules determine residency by looking at Number 1. Permanent home. Number 2. Center of vital interests. Number 3. Habitual abode. Number 4. Nationality. Number 5. Mutual agreement of tax authorities. If a taxpayer uses a treaty position, they must file Form 8833. Dependence and residency verification. Dependents must have a valid SSN, ITIN, or ATIN, meet relationship and support tests, live with taxpayer for qualifying child rules. For major credits like CTC and EITC, dependents must have SSNs issued on or before the due date of the return. Residency matters for dependents too, especially when claiming HOH status or child-related credits. Common mistakes and exam traps. Here are some of the most frequent issues. Using ITIN when SSN is required. Miscounting days in substantial presence test. Forgetting to renew ITIN. Improperly claiming treaty exemptions without filing Form 8833. Dual status filing errors. Incorrect dependent identification. These show up often on the EA exam in scenario-based questions. Identity theft and ITIN program. If someone's SSN is compromised, the IRS may reject their return. Refund may be delayed. Taxpayer must verify identity. The ITIN program helps prevent this. Taxpayers can apply using Form 15227 or online verification. Key takeaways. Alright everyone, let's wrap up everything we covered today. Proper taxpayer identification prevents errors and fraud. SSN and ITIN rules control credit eligibility. Residency status determines how income is taxed and which return is required. Substantial presence test is heavily tested. Know the formula. Non-residents and dual status individuals follow special rules. Tax treaties and forms like 8840 and 8833 affect residency classification. Identity verification safeguards reduce fraud risks. Dependents must have correct ID numbers for major credits. If you understand everything we discussed today, you will be well prepared for EA exam questions related to taxpayer identification and residency verification. Now let us solve some examples and sample questions related to this model, which will be very helpful in the exam. Example 1. Substantial Presence Test, SPT, with exceptions. Rohan, an Indian citizen, was in the US on the following dates. 2024, 140 days. 2023, 200 days. 2022, 160 days. He was present in the US under an F1 student visa for all years. He has never changed his visa status. He earned $24,000 from on-campus work in 2024. Rohan wants to know whether he is a resident or non-resident for US tax purposes for 2024. Step 1. Evaluate whether SPT applies. Students on F1 visas are considered exempt individuals for 5 calendar years, meaning their days do not count towards SPT. Rohan's first year in the US was 2022, but the exam trick is, black right arrow, even if he was here before 2022, only the first 5 calendar years count as exempt. If 2022, 2023, and 2024 fall within the 5-year exempt period, all days are exempt. SPT does not apply. Conclusion. Rohan is a non-resident alien for 2024. He must file Form 1040NR, not Form 1040. Why this matters? Non-residents are taxed only on US source income. Usually cannot claim standard deduction. Cannot claim many credits, CTC, EITC, AOTC. Example 2. SPT calculation, no exceptions. Maria, from Brazil, entered the US on a tourist visa. She has no exemptions. She was in the US for 2024, 120 days. 2023, 140 days. 2022, 100 days. Step 1. Apply SPT formula. SPT is equal to all days in 2024, 120. 1/3 of days in 2023, 140 times 1 divided by 3 equals 47. 1/6 of days in 2022, 100 times 1 divided by 6 equals 16. Total is equal to 120 plus 47 plus 16 equals 183 days. She meets SPT resident alien for tax purposes. She must file Form 1040, taxed on worldwide income. Example 3. Green card holder status. Ahmed received his green card on 1st July 2024. He was physically present in the US for only 30 days before receiving his green card. If you hold a green card at any time in the year, you are a resident alien for the entire year unless electing dual status. Ahmed is a resident alien for all of 2024. Example 4. Closer connection exception. Nadia, a Canadian citizen. She stayed in the US for 140 days in 2024. She has a permanent home and family in Canada. She has a Canadian employer. She maintains Canadian bank accounts. She does not meet the 183-day SPT total. She wants to avoid US residency. She can claim the closer connection exception using Form 8840 if she is present in US 183 days. She has a closer connection to another country. She has a foreign tax home. Nadia remains a non-resident alien. Example 5. ITIN versus SSN and credit eligibility. Anna, ITIN, child, born in the US, has an SSN. Income, $22,000. Filing status, SOH. Question. Is Anna eligible for the child tax credit, CTC? Child must have SSN, yes. Parent must have SSN for EITC, but not required for CTC. ITIN filers can claim CTC, but not EITC. Anna can claim the child tax credit, but cannot claim EITC. Exam level multiple choice questions. Question number 1. SPT calculation and residency. David, UK citizen, was in the US. 2024, 150 days. 2023, 150 days. 2022, 150 days. He is not exempt under any visa category. What is his residency status for 2024? Option A. Non-resident alien. Option B. Resident alien. Option C. Dual status alien. Option D. Resident of UK under treaty rules. Correct answer is option B. Resident alien. SPT is equal to 2024, 150. 2023, 150 times 1 divided by 3 equals 50. 2022, 150 times 1 divided by 6 equals 25. Total is equal to 225 days greater than or equal to 183 days. He meets SPT resident alien. Question number 2. Green card holder. Which of the following taxpayers is considered a resident for the entire year? Option A. A person who received a green card on 30th December 2024. Option B. A person who passed SPT only for the last 3 months. Option C. A person who visited the US for 60 days. Option D. A student under an F1 visa for 4 years. Correct answer is option A. A person who received a green card on 30th December 2024. Green card holders is equal to resident for full year unless they elect dual status. Question number 3. ITIN expired. Sophia files a 2024 tax return with an ITIN that expired in 2022. Her return will: Option A. Be rejected by IRS. Option B. Be processed but credits delayed. Option C. Be considered fraudulent. Option D. Automatically qualify for EITC. Correct answer is option B. Be processed but credits delayed. IRS processes returns with expired ITINs, but credits like CTC AOTC are denied until ITIN is renewed. Question number 4. Exempt individual, student status. A student on an F1 visa arrived in 2021. He stayed in the US all years. What is his residency status for 2024? Option A. Resident. Option B, non-resident. Option C, dual status. Option D, resident only if he files jointly. Correct answer is option B, non-resident. Reason: F1 students are exempt for 5 calendar years, 2021 to 2025. So his days do not count for SPT. Question number 5. Dependent SSN requirement. A taxpayer files HOH with 2 children. Child A has SSN. Child B has ITIN. Income $28,000. Which credits can the taxpayer claim? Option A, EITC for both children. Option B, CTC for both children. Option C, EITC for child A only. Option D, CTC for child A only. Correct answer is option D, CTC for child A only. CTC, child must have SSN, only child A qualifies. ITC, taxpayer must have SSN, this taxpayer does not, so no EITC. Question number 6. Closer connection exception. To claim the closer connection exception, which form must be filed? Option A, Form 8843. Option B, Form 8840. Option C, Form 8833. Option D, Form 1116. Correct answer is option B, Form 8840. Thanks for watching, everyone. If you found this lesson helpful, make sure to like the video, subscribe, and turn on notifications so you don't miss the next topic in this EA exam series. Keep learning, keep preparing, and I'll see you in the next video.